If you want to succeed in trading, okay, if you want to become a consistently profitable trader, you need to become aware of traps. You need to become aware of the bull traps and the bear traps that tends to happen in the market, because I'm telling you, there is a lot of them. Okay, there is a lot of traps that happens in the market, and the reason why these traps happen is to get you liquidated. Okay, it's to get a lot of people liquidated so that you lose your money. Okay, you may or may not know this, but the way the market makers, okay, like the people who control the price movement in the crypto space, okay, the way they make their money, like a lot of their money, is through trapping a lot of traders. Okay, retail traders, they do that. They make their money mostly by trapping traders into the wrong positions. It is so sad. Every time, whenever the price makes a big move, then all of a sudden you start hearing stories of how millions of traders got liquidated, this and that. It is so sad. So I don't want that to happen. I don't want that to happen to you guys, my subscribers. So that's why I'm making this video for you guys, to show you the seriousness of this thing, and then show you ways of how you can avoid this. Okay, number one thing that I have noticed is that these traps, okay, they tend to happen whenever the price breaks major support and major resistance. Okay, as we all know, whenever the price breaks a resistance, the expectation is that the price is going to pump, right? Now, the market makers, they know this. They know what you are expecting. They know that, once the price breaks a resistance, it is going to start going higher. That's what you're expecting. And they know that this is what you're expecting. So what they normally tend to do is that they will break the resistance. After they break that resistance, they're going to wait to see how many traders are going to start buying or placing long positions. Once they see that they've gotten enough people, like a lot of people have placed their longs and buy order, that is when they start making the big move. They will completely make the market start heading the other direction. But you, as a trader, when you look at the market, you see that it has broken a resistance. What do? You get so excited, like, oh my god, okay, this is the perfect chance for me to go ahead and place a long. So you go ahead, open your exchange, go and then place your longs. You place your long, you set your stop loss right below that resistance that's now support, and then you get so excited thinking that you're going to make a lot of money. But a few minutes or a few hours later, the market completely goes the opposite direction, and you start crying. You start being so fearful. You're debating whether or not you should close the trade or not, and you'll see signs that the price is going down. But instead of closing your trade, you keep thinking that the price is going to come back up, but the price it never comes back up. It might go up a little to give you a little bit of hope, but instead of going higher, it just keeps going lower and lower, and then you eventually get liquidated, and you just feel bad. So this is something that happens a lot in the market. Okay, they will make that trap, that's a bull trap, and then the other trap is a bear trap, and this is when the market breaks a major support. Okay, when the market breaks a major support, you might end up go ahead and short the market and everything. Then as soon as you enter a short, boom, the market reversed and starts pumping. This is a trap that happens over and over and over in the crypto market. Okay, I have been studying the chart for over 2 years now, and I have noticed this. Okay, the other thing that I've noticed is that whenever, like, if the price has pumped by a lot, let's say a pump of like 3,000, 4,000, okay, that is a lot. Okay, if the price has done that like I'm using Bitcoin as an example. Let's say Bitcoin has pumped by like 3,000 or 4,000. Okay, that is a big move. Okay, and usually whenever the price of Bitcoin, okay, pumps that much, you know, there is high chance that it's actually going to start falling. Okay, don't expect the price to just continue pumping higher after it has already pumped that much. Okay, what you should be doing is that expecting that the price is going to actually start falling back down before it either continues that pump or changes that trend completely. Okay, so what you want to do, okay, to avoid falling into traps, okay, I will start with bull trap. Okay, to avoid falling into a bull trap, okay, do not, and I repeat, do not go and place a long trade or buy as soon as the price breaks a resistance. Don't do that. Okay, you don't want to do that. What you want to do is, once the price breaks a resistance, okay, a major resistance, then you have to patiently wait for it to retrace back. Because usually what happens is that when the price breaks a resistance, it will pump a little. If it's a true breakout, okay, if it's a true breakout, then the price will continue to pump a little bit, and then after that little pump, then it will come back down to retest that resistance that is now support. It will test it, and then after testing it, then it will continue to move higher. So you as a trader who wants to trade this, you want to wait for the price to come back down to test that support. This is the place where you want to go and enter your long trade. You have a higher chance of actually making profits this way and not getting liquidated. Okay, now one way to know whether breakout of either a resistance or support is real or not is to look at the volume. Okay, whenever the price breaks a resistance, the buy volume has to be very high. Okay, if the buy volume is not that high, okay, if it's just low or just the same as the other buy volume, you know, in the past, then there's high chance that that breakout might be a false breakout. Okay, and you also got to look at the kind of candlestick. You know, if the price is breaking that resistance with a very weak looking candlestick, then there's also a high chance that breakout might be a false breakout. Okay, and then the same thing with support. When the price is breaking a support, it has to break it with a lot of sell volume. If the sell volume is not that high, then most likely that breakout of that support is a false one. Now, how do you avoid getting trapped in the bear trap? How do you avoid that? Okay, for the bear trap, this happens when the price breaks a support. So it's the same thing as when the price breaks a resistance. So when the price breaks a support, you want to wait for the price to retrace back to retest that support, which is now going to act as resistance. Wait for that retracement to happen, and then you go ahead and place your short. Once you do that, I'm telling you, you have a lower chance of getting liquidated. Okay, now the other thing that makes people get liquidated is entering at the wrong time. Okay, when you enter a trade, you want to always make sure you're entering at the right time. Okay, and the right time to enter is usually at support. Okay, if you want to go long, you go long at a support, and if you want to go short, you go short at resistance. These are the only two places you should be buying and selling. If you're entering in the middle or whatever, then yeah, that's not gonna be good. You're gonna more likely you're gonna lose your money. So yeah, avoid that, guys. Avoid that. And yeah, also don't use a lot of leverage. Okay, using high leverage is the other thing that makes people get liquidated quick, because you know, with high leverage, it pushes your liquidation price very tight. Okay, it makes it very tight. But if you use a low leverage, then your liquidation price, it's going to be way far away, okay, from your entry point. So let's say you enter here. Okay, if you're using a low leverage, then your liquidation, instead of it being here, is going to be way down here. But if you're using a high leverage, this is where you enter. your liquidation is going to be literally right here. So the price just has to go against you just by a little bit for you to completely lose all your money. So yeah, it's not good. Use low leverage, and usually what I recommend is 8x or lower. Okay, I might say 10x, but usually 8x or lower is safer than anything else. Okay, the only time you should be using high leverage is if one, you're going to stay in that trade for only a short period of time, and two, you are actually an experienced trader, you know what the hell you're doing. But if you don't know what you're doing, I don't recommend that you use high leverage. No, it's very, very risky. I just want to show you guys a few examples of the traps that has happened. Okay, in the last few weeks, Bitcoin has actually created a lot of traps for traders, and it's so sad to see. Honestly, it is so sad, but I just want to give you guys example of what I'm talking about. Okay, let me share my screen here. Here are a few traps that has happened in the Bitcoin market in the last few weeks here. Okay, I'm gonna just point them out to you. So the first one here that I'm going to show you is this one here. Okay, so this is when the price broke the support. So you see this green line that I have here. Okay, so that green line here, I marked it as support, and this is supposed to help the price to actually bounce back high. But here's the thing that happened. Here's the trap. Bitcoin actually ended up breaking the support here. Okay, it broke it. By the way, I'm looking at the daily time frame. Okay, this chart is on the daily time frame. So Bitcoin broke the support here, Thursday, February 9. Okay, it broke this support, but look at what happened. It broke it. When a lot of traders saw this, they're going to think that the price is going to keep going down. But what ended up happening, as soon as it broke that support, it went down a little bit, but it didn't go that low. After this little bit of drop, the price just completely reversed back to the upside and then pumped very, very high. Okay, it pumped high, and this is gonna get a lot of people hyped, right? Because when you see this, you're gonna be like, oh my goodness, okay, I think we're going higher. But this is what happened next. The price pumped high, it came here and it broke this resistance. Okay, it broke it, but then this break of this resistance was a false break, just because look at that, we have a large bearish candle right here that followed after the price broke this resistance. And then from there, what ended up happening, the price just started crashing down, and once it crashed down, it broke the support again. And this time around, once it broke the support, it actually fell all the way down. It fell lower than this previous time when it broke this. And yeah, so trap number one here, this was definitely a bear trap. And then this, I would call this sort of a trap. You know, if you entered here, I mean, you still would have made a lot of money, like, you know, because it did drop quite a lot here. But then let's say you entered right here. Okay, you entered right here, then you were going to be in a lot of loss, because the price did not continue going lower. Instead, it reversed completely back again to the upside, and this time around it actually managed to break this resistance. Okay, it broke this resistance, and then it just continued higher. So these are trap. We have the bear trap right here, the bull trap right here, another bearish trap. You know, it's a lot. Okay, this happens a lot in the Bitcoin price. I want to show you another one. Okay, right here, look at this. We have resistance right here. The price broke the resistance, but this was a false breakout, because after breaking it, it just came back down. And then yeah, like, this is just sad. So this is why you don't want to just automatically run into a trade as soon as the price breaks the resistance, or as soon as the price breaks the support like this, because you might end up falling into a trap. So yeah, these traps are very, very scary. You know, it's sad that it happens a lot in the market, but you can definitely avoid them. You can avoid them by doing some of the things that I shared with you guys in this video. Okay, now the other thing that I would just advise you to do is actually to work on your emotions. Okay, if you notice the market is highly controlled by emotions, okay? So the emotions, fear and greed, are the two big emotions that are used to control how the price moves and all that. So this is one thing that you can also work on, is to work on not letting those emotions, fear and greed, to control you when you are entering a trade, okay? Like, the only time you should close your trade is if the market actually came to your stop loss. If it came to your stop loss, then you get out. You don't want to close your trade just because you see that the price is falling and you think you're going to lose a lot of money or something like that. No. Before you enter a trade, in fact, you should always know exactly when you're going to get out, and when you're going to get out if the market is going against you, and when you're going to take your profit if the market is going your way, okay? And yeah, don't be greedy. You know, if the market comes to you, take profit, go ahead and take your profit. Don't be greedy thinking that you can make more money and just keep staying in the trade, because I'm telling you, it's gonna go against you eventually, and that's not a good habit to be building, okay? And let's say the market is going against you, don't wait till the price gets to your liquidation price for you to get out. No, once it comes to your stop loss, just get out and then call it a day, okay? And the other thing I would recommend is that when you're entering a trade, you don't want to look at the chart at all, okay? As soon as you enter a trade, just completely turn off your phone or your computer, whatever you're using to look at the market. Turn it off for a few hours and then just go on with your day. Because the thing is, whenever you are just constantly looking at the market, as soon as you enter a trade, it's going to control your emotions, because the market is very volatile. You know, the way it moves, you're going to just keep feeling some type of way, and you might end up closing your trade out of fear. And yeah, it's not good. So yeah, don't look at your chart when you enter a trade. And also, I would recommend to make sure you're mentally stable, okay? Like, you're in a good mood and all that. Like, make sure you're not under the influence of alcohol or any drugs, because in order to be able to make profits from trading, you need to be mentally aware, okay? You have to be mentally aware of what's happening around you, what's happening in the market, you know. And yeah, but if you're under the influence of, you know, drugs or alcohol and all that, this is going to just make you enter the wrong trades, because you're not going to be seeing things the right way. So it's not good. This is all the tips that I have for you guys. I hope you guys enjoyed this video. If you did, give it a thumbs up. I truly appreciate it. And also subscribe to the channel if you have not yet subscribed, because I will be making a lot more videos like this. Have a great day.